All right. Good morning, everyone. Welcome to the stream. Happy Wednesday. Happy Hump Day. Happy March. We're off to a decent start in March. We had a really nice trade on Monday. Um, Yesterday was a trend day, so we had three trades before the trend hit, and I think two winners and a loser, or two losers and a winner. Basically, I think we were basically break even yesterday, but Monday we had a full dollar win. Um, It was a half size trade because volatility's high, but still nailed it. Um, WG Shocker, welcome to the stream. Prabs, welcome to the stream. Hiding in Daniel's room, welcome to the stream. Market's been a little crazy lately. I told my group, if you're not in it, on Monday morning, on our morning call, that war gets bought. And Monday, the market was opening really low, and I said that it's very likely we buy that day up, and they did. Ended it close to green or maybe green. And that's how it goes. Wars gap down and then, find a bottom and get bought. And we saw it again yesterday. They gapped down, pushed down, and then ripped it back up. But today we're trading about in the middle of the range. Your one day minimum down here around 672, 673, and your one day maximum up here around 687. If you're not familiar with what these are the Mentor Q levels, and they're very, very, very good at kind of telling you where the tops and bottom extremes for the market day are. It doesn't mean they're going to hit these levels. It means that if they get to those levels, they're very likely to, um, even if they get above or below them, they're very likely to close back within this range. So these are the end of day levels, meaning that yesterday at the end of day, these are the highest and lowest options levels that they would expect the market to go to. And we think of these as the shoreline of the land where we know what the tides are going to do. They can go up and down or be high and low, and we can build houses based on that, right? But like with anything, there are hurricanes, and hurricanes push the water past the shoreline up into the homes and up into the roads and cause all kinds of havoc. So can they break these levels and continue? Absolutely. There can be what we call hurricane days, but they're very, very rare. So like on Monday, they opened well, they move each day, but Monday, is this Monday? Yeah, they opened well below the one day max or minimum. It was up here somewhere, I believe, and then they ended up closing up here. Yesterday, they got well below the one day minimum and ended up closing above it. So they can go through the level. These are end of day, kind of where they're expecting the market to close, and it's going to be usually very, very, very often inside of this range. So if you're looking for potential trades, these can be places to watch for reversals if you get the right setup. Now, we don't just trade blindly just because they got to that level. We say, oh, we better get long. We wait for them. They might spike it down into this put support here or this put support down here. So, and then come back up above it. But by the end of the day, we would expect them to be above this level or below this level in this range right here. So that's what those are. The high volume levels are, actually, let's skip those for a second. We'll come back to those. The call resistance 0 DTEs are the extremes. So these are called call walls or gamma walls in this case. And that is where the market flips into positive gamma and the market makers have to start covering. Because when you buy an option, somebody has to sell that to you. That person is generally the market maker. And they do that in large volume. And so what they're looking for is just to capture the spread in between all the trades. They make millions of trades, and they're looking for the 2 to 3 cent spread that they get each time making those trades. When they have an imbalance, in other words, there's way too many people on the call side or way too many people on the put side, they have to hedge or what they call in the gambling industry, lay off the other side of that trade. So if they have sold so many calls and the market gets above these prices, this is where the market maker starts to get underwater, and he has to start then buying futures himself. So this is the SPY, so these are options and the SPX, things like that. He buys futures to hedge his calls here, and that fuels the market and gets what we call positive gamma squeeze. So the market maker has to buy. People are buying because the market's going up, and then the shorts are getting stopped out and they have to buy. So it creates this really strong squeeze, and this is where you see those 100-point days, 200-point days, where they start to accelerate above these levels. Same thing to the downside. Your put support is where your put walls are, and that means that this is where the market maker sold a ton of puts, and below this level starts to put them underwater, so they have to buy or sell futures on the ES to hedge that, and that causes the waterfall effect we see when the market goes down. So those are what the Mentor Q levels. If you really like them, they're an excellent product. I do have a link where you can get a discount on them in the description, so check that out. I don't push products. The only things I will push are other people's products just for money. I don't just shill stuff. That's not what I do. I push two things: TradingView, and I don't even push that, honestly. I just say I use TradingView and I like it. But I have a link for Mentor Q because I do really like it, and it's a very, very strong product, and it's something that I use myself. If I don't use it, you won't see me talking about it. So it's a great product. Check it out if you want. Okay, so if you're new to this stream, what we do here is we showcase our indicator. It's called IWJ Pivot Point Pro. You can see the buys and sells on the screen. It has netted us about $120,000 over the last 2 years of profit on a $100,000 account. So it's 120% gains in 2 years. And we trade 25. Well, we were starting at 25 contracts per trade. We moved that up to 50 contracts because we have grown our account into a place where that's now a comfortable size. And when volatility is really high, sometimes we only do half-size trades because it's really expensive when you have $3 options, and you can lose money really quickly. So you need to size down and adjust for that. And ultimately, hopefully this is the other part of the stream that you like. We talk a lot about trading tips, mindset, and trading plans. And hopefully you understand that trading is a long-term game where we're not looking to get rich today. If we happen to get rich, there are days where we buy and the market goes straight up forever, and it's awesome. There are days that go straight down and we sell, and we're on top of that. You're not technically going to get rich, but you're going to have a really nice day. But if you're putting all your money in on a trade, you will be broke. There's no question about it. You will be broke. Even if you're right on that trade or 5 trades in a row, you will be broke. That style will not work. You will not win. It is gambling. It is 100% gambling. Can you get lucky and get rich? Sure. Of course. People have put all their money in on an overnight trade. Market, for whatever, squeezes or sells off. They're on the right side of it. They become millionaires overnight. However, those people will likely be broke. And even with that $1 million, they will likely be broke. But if you learn smart trading, risk management, and understanding how to stay in the game forever, you will succeed at trading. Hardly ever is it the system. Everybody jumps from system to system. They're looking for the next great indicator. They're looking for the next great moving average system or whatever it is. They think that there's some silver bullet out there that's going to save them from themselves, and that isn't the case. Most of these systems work. I'm not going to say all. There are people out there that have no idea what they're doing. There are scammers. There are all kinds of pieces of shit out there. But from reputable traders who have been doing this for a long time, most of their systems work if you follow the rules. The problem is nobody follows the rules. So, does our system have rules? It absolutely does, because you have to follow those rules. You have to understand how to trade in order to trade. The reason professional traders are professional traders is we all trade basically the same way. Some of us have a little more aggressive strategy. Some of us have a little more passive strategies, but we all have the same risk management strategy of, if I'm wrong, I'm okay to be wrong and get out. I have no ego about my trade. If it's wrong, it's wrong. Cool, next trade. Doesn't matter. We're all going to lose trades. Every single one of us is going to lose trades. Every single system is going to have losing trades. You might lose for weeks, even months, in a winning system. We had a losing month in, I believe, August, and then we were flat in September. So we had 2 months of basically no income or negative income. And then in in October and November, we made $50,000. So it all evens out. You have to understand that trading is all about probability. I was having sometimes I get down these rabbit holes of responding to comments. It's so dumb. I'm like a child. And the guy said, you can't predict the market. I said, you're right. No one can predict the market. That's a fact. But what you can predict after hundreds of years of data is probability. You can predict how probable it is the market will react in this way at this time. And if you know those probabilities and you simply play the probabilities, you become the casino. Does the casino predict the roll of the dice and craps? No. Do they predict the slot machine that's going to hit the jackpot? No, they have no idea. But they do know that the roll of the dice and craps is eventually going to pay the casino. The slot machine is going to pay the casino. It's not going to pay the gambler. Is it going to pay the gambler for a short term? Sure. There are great craps rolls. There are great blackjack runs. There are great slot machine runs where people get really lucky or hit jackpots. But in the long run, the gambler isn't building $1 billion mansion. The casinos are building $1 billion casinos because they are on the right side of probability. And the law of large numbers tells us that probability wins every single time. I watched I'm this guy. I watched a slot player. He was on YouTube play. He bet $1 million to win $1 million. In other words, he's trying to bet $1 million through slot machines and get a even money or better return. So he ran $10,000 a day through slot machines, and he would go till he either hit a jackpot or lost all 10,000. And at the end of that $1 million of betting, he had gotten back $930,000 of betting. So he lost 7% of his money, about a 93% return rate, which is about what slot machines run. Depending on the casino, they're between 90 and 97%. So the law of large numbers tells you that that plays out every time. Over $1 million, the casino said, thanks for $70,000, buddy. We appreciate it. Do it again. They understand that it isn't that one guy who goes in, puts his $100 bill in, and somehow hits the grand jackpot. It's that guy putting in, or that series of people putting $1 million through the machine, and the casino always collecting because the numbers always play out. Even though it's a random number generator, even though that's how it works. So if you can understand that, and you can apply that to trading and be the casino, you will be a successful trader. That's it. Our system is great. I love it. Is it the only system that works? Absolutely not. Absolutely not. There's a million systems that work. There's a million ways to trade. It may or may not be for you. It is for me. I love it. A lot of our people in our room love it. And if you use it the right way, you'll love it too. So how do you use it the right way? Well, we do have some things on here. The blue is after hours trading. So the market closes. It goes, to about midnight or so, or whatever time it goes to. The SPY is always different. Was at 19:55, so 8 o'clock. Goes to 8 o'clock p.m. Eastern, shuts down, opens back up for pre-market trading. We don't trade any of this mess in here. It's usually very choppy. It's usually very slow. These buy and sell signals should be ignored. We start trading at the open. That's 9:30 a.m. Eastern time. We trade until noon Eastern time. So it's only 2.5 hours of trading a day. And quite frankly, if you win the first two, you should probably just walk away and be done for the day anyway. But we trade till noon, and then I have my noon call, and then we wait till the close. We don't trade the close or anything. We just come back to do the close update, which, by the way, if you're not in my rooms, I'm going to be doing my close updates live on YouTube. So every day we'll have a YouTube live at around 3:55 where we watch the market close. I go through the closing thoughts and do my video that way. Instead of doing the overnight videos, I'm in a lot of projects right now. I haven't been able to do overnight videos to give updates. So that's how we're going to do the updates moving forward next week. So we don't trade after noon. So we trade from 9:30 to 12. And then we don't trade on trend days. So when the market, so you have here, you can see, let me zoom in a little bit. So you have your after hours high, right? And then you have your pre-market high. The pre-market high is higher, so that's the number we use. Whichever one is higher or lower. The after hours low, pre-market low. In this case, the pre-market low is lower, so we use that one. These are going to define when a trend starts. So that's your overnight range. From here to here is your overnight range. If they start to break out of that range to one side or the other, in this case we'll say down, and they back test these moving averages. So you have the red is the 8 EMA, the blue is the 21 EMA, and then you have VWAP. If they back test any of those and then create a lower low, so they break this low right here, that's your trend day down. They have to break the pre-market low, back test into the range, come back out of the range and break down again. That signifies a very likely trend today. Does that mean it's definitely going to trend? No. They can absolutely reverse it. They can chop. They can do a lot of things. But it does mean it's a very difficult day to trade. So we don't trade it. We sit on our hands and move on to the next day. Same thing to the upside. They break above the pre-market high, come back, test one of these moving averages, break this high right here to the upside. That creates a trend day up, and we sit out that day. The last rule is a simple one. It's 3 strikes and you're out. So choppy days tend to give you like a sell signal and then not work out, a sell signal and not work out, a sell signal and not work out. If you get 3 of those, We are done for the day. Our max loss is 3 trades, and we have hit that sometimes. And you sit on the hands the rest of the day. Even if a great trade comes, you don't take it. One, you're going to be emotionally probably stressed. Two, the market has shown it wants to be choppy and may or may not follow through. So now you're chasing follow through, and you could chase it 3 more times before you get the follow through, or you may never get the follow through. So the setups aren't as good. So we sit out there. Those are the rules. And sometimes it's very frustrating. In February, we had 14 of the 19 trading days were trend days. 5 days of trading, and then a few days in there before the trend happened, we had some trades. We ended up positive in February. We were down almost $6,000 or a little over $6,000 going into the last week of February. We ended up almost $5,000. That's how trading works. You're going to go through losing spells. You're going to go through winning spells. The winning spells, if you do it right, should outweigh the losing spells. For instance, we had 3 winning days of trading in a row toward the end of the month. Those 3 days wiped out the first 20 days because our winners run and our losers get stopped out. That's all effective trading. That's what we need to be doing as traders. That's how you manage risk. That's how you keep your bankroll alive to play again tomorrow. Because when you can do that and you can follow the probabilities, they will always swing back in your favor, and they will always even out to the numbers or percentages that you're looking for. If you're concentrating on how many trades you win, you're going to be a losing trader. If you're concentrating on each trade, you're going to be a losing trader. This is a big picture game, and it's a structural game, meaning if your risk reward is 3-to-1, you only have to be right 1 out of every 4 trades. That's a 25% winning percentage to break even, right? Because you get 1 unit of loss on 3 losers, and then your 1 winner, you got 3 units of win, so it's break even. So you only have to be 50-50 to make money, and even less than that. 35, about with fees, probably 38%. So the winning percentage is not a relevant number. The risk reward setups are, and the overall setups. So keep all of that in mind while you're trading. As far as the markets go, we are in a potential breakdown. Yes, we've pulled back off the highs. Yes, we've broken some minor support, but we haven't broken any major support, and the market is not following through to the downside in the way that you would like to see. So we'll have to see how the market plays out over the next week or so to give us a little more information. But they broke down out of the range on Monday and Tuesday, and both times got bought back up into the range, which is weak. That is generally turning into a failed breakdown and can lead to a very strong squeeze back to the upside. So we're stuck in a range for now. If we zoom out and go over to the ES real quick, I'll go through the counts. Let's go to the 3 hours. So we have 2 potentials here off of the wave 4. Where's that at? Back here. Off of the November lows back here. You either have A and B, and you're looking for C higher up towards 72 to 70, 7170 to 7270. Okay, that would be the first potential. This is major support down here. By the way, these are all minor supports that got broke. Your second potential is that this 4 led up to this 5, right here, this peak, and then you have red A down, red B up. This would be 1 of C, 2 of C. Now the problem you have here is what happened after. They've come down to the 1, 2, 3, 6 and bounced back up through the pivot, which is a very bad sign for the market continuing. So if they're going to continue to the downside, it now has to be a diagonal. So we would look at this as 1, 2, 3, 4 back into 1 territory, and then 5 we would look for to 66.24 to 65.92. Now 65.92 happens to line up pretty darn well with the November lows, and I would be very shocked if we came into this level and did not bounce. So that makes sense that this diagonal would end here, and we'd look for a very sharp bounce off of that. So the bears have their work cut out for them now. The door was kicked open. They were able to walk through it, and all they had to do was keep going, and the bulls kicked them back through the door and slammed it in their face. So now the bears have their work cut out for them, and the bulls have the ball. So we are not in any kind of clear, here we go, bulls are going back to 7,300 count yet, but they have the advantage because they have destroyed the impulsive move down and turned it into a potential diagonal. So if the bulls are going to follow through, they have to get above this 69.12 area. That would be a very strong indication that the bulls are going to try to push this back toward the highs. Now, the caveat to that is the NASDAQ. The NASDAQ is still in a very clean downside setup, and until it breaks down or breaks down that setup, it's the downside is still very possible. So you have your wave 4 potential here. That would be the bullish potential where this is A and a very deep B, and then you'd start higher. However, this is a pretty clear ABC up, and they've retraced very deeply off of this, so this does not look bullish to me. And then on top of that, your downside would be that this is A, this is B, and now you're starting 1 of C, 2 of C here, and then 1 of 3 of C, 2 back up. And as long as they can stay below this 25.5 area, they are valid to break down. Their targets would be 23,382 first, 22,881 would be the more primary target. You look for a bounce, bounce, continuation down towards the 21.7, 22.12 areas. So the NASDAQ has a much cleaner downside setup. If they break this support, the November lows, I do see acceleration coming in to the market very quickly. But if they get back above 25.5, that blows this up, and we have a bigger, a more likely bullish setup. And it's very possible that ES goes and makes a new all-time high, and NASDAQ does something like this. The NASDAQ is very weak. It's very, very far off of its highs, much weaker than the ES in that regard. All right. So we've got about 5 minutes here. I'm going to start getting set up for the day. Let me see where we're at with the markets. Let's see here. Crazy president, crazy market. The president has little to do with the market. Very little. Hi, Jay. Great idea on the daily close video. Thanks, George. Appreciate it. Welcome to the stream. Crazy Kelly, good morning. Good morning. I don't think you're crazy at all. You're probably just awesome. Joseph Rapp, daily video for close. Popcorn. That's good. I like it. Thanks, Joseph. Good morning, Jacob and the usual suspects. Good morning, Interwave Flow, Maxime. Can you imagine ES and NQ will go very different ways for extended periods, like a month? Not likely. In general, what you get is weakness, relative weakness. So they'll both go up, but maybe the ES will go up 2% and the NASDAQ will only go up 1%, or they'll both go down and the NASDAQ will go down 5% and the ES will only go down 3%, something like that. Yes. Different directions, very unlikely. There's too much overlap between the Mag 7 and the ES. There's like 37% of the ES or something. I can't remember the exact number, but it's in the 30 percentile. So where the Mag 7 goes, most of the markets go. Most of those two markets, I should say, the NQ and ES. Oh, I answered it already. Well, I'll answer it again. Why not? All right, guys. So we have about 4 minutes here. Let me see what we got on the charts. We are not, the NASDAQ is in a middle zone here, so we're not going to get a trade to start, and I can't tell you what we'd be expecting yet. Typically, we would be expecting a buy signal coming in, but that's going to be much further down. So the more likely scenario to me is you get a bounce at the open and then a down. If when I say the most likely scenario, what I mean is to get a signal, the most likely scenario is going to be a bounce. And then we get a sell signal. Now, if they bury it here, we can get a buy signal like that as well. So either they bury it and we get a buy signal coming back up, or they spike it back up, kill this sell with what we call a sell stop. So you see this SS over here. That means this sell stopped out. So you get an SS, and then you could get a sell signal after that. Otherwise, we'll look for them to press it and give us a buy signal. But right now, we do not have a clear idea of what we're going to get for our first trade. So we can't really set up for our first trade until we get a little more information. Let me adjust something on my Thinkorswim here so I have it ready. Okay. Any other questions before we get started? Well, all right then. Let's see what we get. We're pulling back into VWAP into our moving averages here, so we would like to see them hold the. Well, it doesn't matter what we. It doesn't matter what it does. If you're looking for a sell signal, you'd like to see them hold and spike. If you're looking for a buy signal, you'd like to see them spike through down toward this 680 level, and then maybe give us a buy signal off of this support down here. Do you expect high price options today? I'm always having challenge ready for open with proper prices. No. Yeah. So the answer is going to be yes. Where's VIX at right now? The VIX is volatility related options prices, just so you guys know. So the VIX is still well over 20. So the answer is yes, but maybe not as high as yesterday. So I'm guessing maybe in the the one high ones to mid twos. I don't think you'll be up around threes, but maybe like two and a quarter or $2. If they're around two or two and a quarter, I'll probably just play them as full size positions. But if they're up over 250 or higher, then I will probably just play them as um, half positions. And what you can always do, Maxime, is just have it set up for a half and buy. And if it is a price you want, just buy twice. Hit the buy button and then buy it again. All right. So we're moving down here. Looks like if they're going to move down, then we would look for this to be, well, we'll see. We'll see what they do. Not sure yet. Kane, if you are on the live stream, I'm giving you access to the throne room right now, and you should have it. You might need to refresh your screen. Refresh your screen. Um, okay, here's the spike up. Now we need them to kill this sell. So we need to see a sell stop, which is that SS dot. Um, and if you see that, then you can expect a sell to be the next signal. Right now, we don't have any expectation for a signal. I can see the back end of the indicator, so I can kind of know what's coming or where we're at in the process. And right now, we're in no man's land. Good morning. I've been feeling like I'm in a crash lately. Well, good morning, cats at home. Welcome to the stream. Kane, see your message. Welcome to the stream. Well, the market's kind of been feeling like a crash, not a full-on crash. It's mostly a corrective pullback right now, but we'll see how they play out. If they can fail it down and close it below the weekly 21 this week, that would be a win for the bears. The Nasdaq points lower. The Nasdaq is pointing lower. The Mag 7 is weak, but there's a lot of Mag 7 that even though they're weak, they're at support. So what you could see here is a dead cat bounce on the NQ because all of the Mag 7 has been so killed. They're at support, and you may get a little bounce here about halfway back up, which would push ES to new highs most likely. And then NASDAQ would not make a new high, and then both of them turn down together after that. But I mean, the foundation, I mean, every single day gets bigger and bigger cracks in it with all of the economic data points that come out that are bigger picture things that have taken a while to get to this point. So I've been talking about banks are in big trouble for a long time, but I've also put the caveat on that of that doesn't mean they fail today. If you watch The Big Short, Michael Burry knew that the banks were in trouble back then, but it took like 2 years for that to play out, and he almost went broke and lost the whole deal because he was selling those credit swaps or whatever, or whatever the product he made was. But that took almost 2 years to play out before the bank started to fail, even though he knew it was garbage underneath. So for a year and a half now, I've been saying banks have major issues under the hood, and we saw another bank in Illinois go under. We saw Blue Owl go under, who's a shadow lending firm, and that's the one to be scared about. The private equity firms going under is a really, really bad problem because there is billions, if not trillions, of dollars on balance sheets from shadow lending. and nobody is monitoring any of it. None of it's regulated. Nobody knows what's going on with it, and it can just out of the blue blindside everyone and absolutely crush them. And nobody knew it was happening. I mean, if you know anything about the economy, banks, and money, you should know it's happening because unregulated banking in a banking industry that's borrowing from the repo, that has no liquidity, that is having problems getting payments, that is having default rise in almost every single market. Credit cards are getting near their all-time highs. Auto loans are getting near their all-time highs. Mortgages are starting to rise again. Commercial real estate is at its all-time highs of default. So in markets like this with liquidity issues as well, it's a very, very, very tenuous spot that will eventually break. And I think honestly, I talked about this yesterday in my room. I'll give a quick synopsis. I won't get back on my quote unquote conspiracy soapbox. I'm not a conspiracy theorist, but flat Earth forever. Just kidding. Those guys got to be sad. Every conspiracy theory has come true except that one. Um, so I think that the elite want the market to crash. I think that for a long time they've had that there's been a plan of the haves and the have-nots, and there's been two major tests of what people will do and can you get them to fight. And I think they found out that people won't, at least not yet. I think COVID was a major test to see if people would fight back. And I think that the Epstein files are a major test to see if people will fight back. If you can literally lay the most heinous crimes in the world in front of people and no one does anything about it, and heads aren't rolling and people aren't going to jail and being taken out of power and all of these things, then you have an elite versus a non-elite problem, not a Democrat Republican problem, not a um, who's right, who's wrong problem. You have a have and a have not problem. And if they can control you and you won't fight back, they win. And I'll keep this quick. Sorry. If they can crash the market and they know it's coming and be on the right side of it, and now the middle class is destroyed, you already have the low, the poverty class who's struggling. Now you have the middle class who you'd push into that class. Retirements would be crushed. Pensions would be crushed. BlackRock's already buying every house in America. They control everything, and then they say, "Oh gosh, you need stuff. You must come to us, and you must do our bidding to get it, and you must pay our prices to get it. And if not, who cares? We got the money. We've got the power. We've got what we need." So that's my soapbox. That's my conspiracy. I hope I'm wrong. I hope I'm way wrong on that, but I do worry about it. How's breath this morning? It is it's okay. It's positive 379 and falling. Um it opened at about 8 870. So it's fallen pretty strongly. It's followed on about 500 already. That's a good indication for the bears. Duh, bears. Um Still don't have any kind of trade set up yet, but we will here maybe in a few bars, but nothing right this minute. What did I do? Oh no. Oh, I docked it. There it is. Okay. Whew. All right. So we need them to push down a little further. We're still not through a full sell cycle yet. Um, we're getting there though. Squeeze is playing out or is building, I should say, not playing out yet. So we'll keep an eye on that. Um, the Vold is positive, but not like overly positive, and it's also dropping. The ADD is dropping pretty sharply. Actually, it's down to 245 now. So that's again a feather in the cap of the bears. Jacob, the whole point of EW is not to depend on the news or the whatever catalyst. I found it odd you're talking the economy while talking EW. It's very irrelevant. Reggie, good point. So there are two different things here. We're talking about two very different things. EW is separate from the news. That is 100% true. The news is noise. It is a catalyst. It is not, and all that means is news does move the market. There's no question that when Trump tweets, a war happens, the Fed speaks, CPI comes out, the market moves. However, it doesn't always move in the direction the news indicates it should. In other words, a war may or may not make the market go down. If you look at and usually it makes it go down and then it gets bought back up. If you look at the Iran or Israel invasion of Iran the first time, we had a monster squeeze on that one. They sunk it on Sunday and then bought it back up, and it was positive by Monday, and we went to new highs. If you look at Russia's invasion of um, Ukraine, also same thing. We had a little gap down, and then they bought the heck out of it. So you would think war would be bad, but it's not. It's good for the markets most of the time, or the market uses it for good. You know, Trump sometimes tweets tariffs and the market crashes. Sometimes he tweets tariff things and the market goes up. The point is it doesn't correlate. Now, what I'm talking about is, and here's the bigger thing, Reggie, is that what I'm talking about is day-to-day headlines. So this headline today is going to move the market, but it's irrelevant in which direction you think it's going to say. There's numerous studies on this, and one of the most impressive ones was even if you had the news ahead of time, you knew what the news was going to be before it came out, you still only had about a 50% chance of guessing right because the market doesn't care about the news. In the day today, however, the market cares about bigger economic things. Those things control what grips fear and sentiment. Those don't play out in one headline, they play out over years. This is something we've been looking for this crash uh, for a while now. I started talking about it back in I think 2022 or so, saying in the next 3 to 5 years we should be seeing a major top and turn down, and that turn down should be massive and could last up to 2 decades. And um, that all plays out over a macro environment. The macro environment, those headlines, they build up in the past and then they take a while to play out through the future. Banks were in trouble a long time ago. They still are in trouble, but now you're starting to see the banks in trouble. I knew they were in trouble long before any of these banks went out of business. I've been talking about it forever. And now you're starting to see that trouble come to the market. So yes, I am talking economics because economics do matter in a macro sense. They don't matter in the day to day. The market moved down 100 points because of the headline. So you have to distinguish, between the two. That one is um, one is a immediate causal effect that is irrelevant, and the other is a long-term causal effect that is very relevant. The market and the economy are tied together in a long-term sense, not a short-term sense. So hopefully that made sense. Do you think the volatility is impacted by AI trading? No, I don't. I think it's impacted by overall macro events and the market makers and the people the hedge funds and the institutions. I think that AI trading is, I wouldn't even go as far. The algo trading is what I'd go more toward. Algo trading is more what giant companies had a long time ago before anybody else, because they knew if they had a person in charge of that person, no matter how good they are, myself included, no matter how good, and I say myself like I'm some superstar, as a guy who trades for a living, I still run into emotional bouts with the market. It's impossible not to. It's a frustrating entity sometimes. The market is an emotional being and it makes you emotional. And the reason the market is an emotional being is because it's tied to human behavior. Everything tied to human behavior is reflected in emotion. And so fear and greed are the two main ones that come to mind. And then that creates anger, sadness, volatility, happiness, overconfidence, all these different emotions that can mess you up. So I don't think that it's changed the volatility. I think it's changed the accuracy of larger corporations to be able to completely remove the emotional factor of trading. NQ got its sell stop. It did get a sell stop, but it doesn't matter. ES didn't, and now ES is now getting through its sell cycle. NQ, however, is not yet there. It's close, but we still need a little more on the NQ. Just because you are paranoid doesn't mean they are not after you, Jacob. I wouldn't say I'm paranoid. That I think that's a step too far, but I am concerned, and I have concern for how this all gets handled if the market does move down. I didn't have this much concern before the Epstein files. I don't understand. Well, I do. I absolutely do. Absolute power corrupts absolutely. But um, I, that there isn't a revolt. The Pam Bondi can actually say out loud, if we prosecuted everybody, the whole system would collapse. As the excuse for not prosecuting everybody is all you need to know. Then the system should collapse. If you have a system full of predators and pieces of shit, and sorry, I'll get pretty worked up about this. When you have a daughter, you even if you don't have a daughter, if you have a soul and you don't just anyway, and it's not just American power. You see all these, the guy from Norway, the guy from Spain. There's a bunch of the royal family. Everybody's involved in this, and that nothing happened because of it is what worries me, because that tells you that the kings know that they're kings, and that's a problem. And once they know that they're kings, they'll take the next steps. No problem, Reggie. Hopefully that made sense and you understand what I meant by that. What price are you planning to place your? You got to finish that sentence, Otis. And welcome to the stream. Welcome to the stream, Papa Bear, Reggie, everybody else. If I didn't say you, sorry. Alexi, welcome to the stream. Or maybe it's Alex L. Logachev. Maybe it's that. It's either Alexi or Alex. Either way, welcome to the stream. You're absolutely right, and you are not alone with that view. Oh, what price am I planning to place my trade at? You got to be more specific. I'll place my trade with the indicator. Okay, as long as this bar continues to stay a little bit red here, the Nasdaq should get into a sell cycle, and then we can look for a buy signal. FYI. I don't know what trade you mean, so you'd have to be more specific. If you're talking about a day trade, it'll be at whatever options price we're at when the day trade comes. Currently, we're looking for a buy. Options prices at the money are about $2 to 250, so we'll probably take a full position. But right now it's looking like around 680 to 681, just depending on how deep the market moves down. If we don't get a trend day, there's been a lot of trend days lately. They could absolutely break down through the pre-market low here and continue. Well, unfortunately, this is keeping the Nasdaq out of completing its sell cycle. So we'll need some more downside if we're going to get a buy signal here. The Nasdaq has not been as weak. So you can see these two bars here. You had the first green bar and then the red bar that eclipsed it. The Nasdaq has barely eclipsed this first green bar. It's in relative strength up here. So the Nasdaq is not selling like the yes. We are negative 174 on the ADD, so it is still careening to the downside. So that is a interesting development as well, that the ADD is not on board with this move. However, if you have Mag 7 versus the market, we talked about this I think last week actually, where the Mag 7 was strong and the rest of the market wasn't, and it wasn't strong enough. The rest of the market wasn't strong enough to pull it down because the Mag 7 was too strong. So what do we got? Nvidia's up 1.5. Meta's up a half. Microsoft's flat. Netflix up a percent. Yeah, the Mag 7's really strong today. The only major red one is Apple. and there's enough other ones to outweigh Apple pretty heavily. Google's flat, yeah. So I would say the Mag 7 is going to have to fade a little bit for this to continue to the downside, but you're seeing a lot of what we saw last Wednesday, where the Mag 7 was strong, but everything else was kind of weak. The RTY is actually red now. Um, Banks are red. The transports are basically flat. So you're not seeing a bullish overall market. A bullish overall market would have RT strongly green, Dow Jones strongly green, transport strongly green, and banks green. And we're not seeing that. We're seeing a Mag 7 semiconductor market, not a broad market. So if you can see some fade in the NASDAQ, you will see this market turn down sharply. If not, you'll see chop and grind sideways to higher. And if the ADD recovers and RTY starts to rip, then you'll see a squeeze. So now you have the Nasdaq who's trying to get back into a full-on sell stop buy, and the ES that's still in a sell cycle. So they're very out of sync right now. And that's the thing, when they're out of sync, the markets very often chop and you don't get great trades. As you can see, we bounced it back up to VWAP and rejected it. You had some chop at the open before it dropped a little bit. So be careful trying to trade until the markets get in sync with each other, because when they're trading against each other, or one is very weak and one is much stronger, um, very often that leads to chop, because if the ES is weak and the NASDAQ isn't, that tells you that the rest of the ES isn't doing so well. So the Mag 7 is 30%. It can't overwhelm the ES and bring it higher, but it can hold it, right? So it holds the ES kind of in place. And then the ES weighs down the NASDAQ because there's no broad buying back and forth. So you're not going to get an explosion out of the NASDAQ without the ES participating. And if the whole rest of the ES isn't doing well, then it's going to be very hard for them to participate. Hey, Jacob, you think overall this is wave three of three down or wave five up? Neither. Um, if you go back to the beginning of the video, kind of about 20 minutes in or so, I went through the counts. But if we're moving down, it's in a diagonal structure because the overlap of the last few days. They went down to the 1, 2, 3, 6. They bounced it back up through the pivot and overlapped wave one. So you're just not in a place where this looks like an impulsive move or a C wave to the downside. So if they're going to continue to the downside, it won't be impulsive unless it's in a diagonal format, which means it can be very choppy. And in that case, we would be in wave five down and wave A of five, and we would have to push down from there, and we'd likely push down toward the November lows. That's where we would target for that. Um, to the upside, we would be starting C of five, because remember the upside is a diagonal. If you hear the word diagonal today, take a drink, and by 9:55 you'll be drunk. Um, we are in a diagonal to the upside as well, and this would be C of that diagonal starting. So you would see a squeeze higher, and that would be C of 5 pushing towards 72 to 7300. The technical targets are 7170 to 7270, but that's where we would be looking for this market to head to if they do decide to rip it. And I've been, if you've been listening, if you're in my group, you know that I still think another high is likely, even if we break down here. They can go all the way down to the April lows and still go back and make a high. The structure just needs another high, in my opinion. I could be dead wrong. The top could very well be in. So when you want to talk about bias and emotion, I made a trading mistake because I'm human, right? If we go to our weekly chart, you can see, maybe you can see, not right now, you can't see crap. If you go to our weekly chart, you can see that we got a sell right over here at 695, And my bias said, no, we're going higher. I'm looking for another high here. We should be going higher. So I did not take this sell at 695, and they took the market down to where? 670, a 25-point drop. So I missed that 25-point drop because I'm an idiot, and I didn't. I let my emotions, um, I let my emotions and my bias take over instead of saying, hey, this thing that looks at the data, this thing that looks at exactly what we're talking about, told you that this is a likely weak market, at least a weak top, and you should sell it right now. And I said, no, 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 I'm really smart. I'm smarter than the thing I programmed you to do because I'm so smart. And then I miss a 25-point trade. So human factors in every single time. Nobody's perfect. I mess up. Everybody messes up. And that for me was a mess up. This, by the way, is a big deal. 677 on the SPY. Watch for that on Friday. I'm not saying they're going to be there Friday. I'm saying that's the number that the bears need to be below on Friday at the close to kind of set this market down. If they close below the 21, I mean, if you just go back historically, the 21, if they get to it, they generally bounce. If they get to it here, bounce, bounce. They haven't closed below it in a long time, and it's probably since April, I think. Um, I mean, if you just look here, they got to it here. This is April, yeah. So the April lows was the last time they got below it, and when they did, it was sayonara, right? And then they came back and got above it, and once they did, it was adios to the upside. So the 21 on the weekly, very, very big level. It's at 657 right now, so you need to watch that level for the Friday close. Everybody should be able to be transparent with you, by the way, if they can't tell you they made a mistake or they can't tell you why they're trading or they can't tell you what their system does. Those are the scammers. Those are the liars. Those are the guys that don't know what they're doing. Um, if they can't show you their losses or tell you that they lost or any of those things. Now, I understand marketing. Marketing is a different animal. When you are advertising your product, obviously you're not going to go in there and be like, we're down this month. That's bad advertising in most cases. You're going to highlight the highlights. That's the whole point of it, because you want people to get on board. But when you are on board with those people or you study them, they better be able to tell you, one, why and how they trade, two, what their whole process is, and three, that when they win and when they lose. Every one of my trades is documented, written down, and tracked by myself and an outsider. So we have third-party verification. And he's not an outsider. I mean, he's part of the group, but he's a customer of mine, and he keeps me honest, and I appreciate it. I didn't even ask him to do it. He did it on his own, and every month he checks the numbers and just says, "Hey, here's what I have. What do you have?" And we have the same thing. And sometimes he has, because I'm always moving really fast, because I'm in the middle of trades and I'm trying to do stuff, and I get out the average prices and all that stuff. So if we win, I say, here's how much we won. If we lost, I say, here's how much we lost. And if I have typos in there, he's always correcting me. So those are things to look for if you're ever looking for somebody to mentor you or trade with. It doesn't have to be me. I'm just a person that trades and tries to help people, and you may not like my style. That's okay. But if you do pick somebody and that's the way you go, they better be very open with you on what they do. Does a new high mean trend day parameters? They broke the pre-market low slightly in the back. Did they break the pre-market low? What am I on? I'm on the 5 minute SPY. Where's after hours high? Where's my pre-market low? No, pre-market low. Now you have me all confused. Hold on. Pre-market low is down here at 677.55. Welcome to the stream, Williamstown. Oh wait, does a new high mean a pre? High. It would help if I could read. Sorry. I saw red bars and just assumed low. My fault. My fault. Um, I would say actually, see, this is what happens when we don't have a trade right away. I'm not paying attention to the market. So we did poke over the pre-market high, and then after that, we've closed candles below VWAP 8 and 21. Typically, that leads to the pre-market low. So 678.26, 677.55 are likely targets today to the downside, and then we'll see what happens after that. But that can be anytime you see a failed breakout like this, so they get above the pre-market high and they close candles below all three moving averages and they don't reclaim them. So if they would have done this, if this candle would have done this and closed and then the very next candle did this, that would still be a back test and hold. But they didn't. They continued, and then they so far have come back and rejected it. So more often than not, when that happens, you're going to go to the bottom of the range, and that is the pre-market low, which is 677.55. Now the bottom of the range, technically from this move, so they created this pullback low and then went high and did it. So this is technically the bottom of the range, but more often than not, it goes to the pre-market low. So the very likely target is 679.02. And then also likely to get hit are these two lows. Thank you for pointing that out. We didn't have a trade set up, so I wasn't really watching that hard. I was just waiting for the shift in the buy sell cycle, and I did not catch that they popped over the pre-market high. A new high would not technically signify a trend day, but it would tell me that volatility is likely to be high, and we would see potential chop because you make a high, you pull back below the moving averages, you chop for a while, and then you make another high. Then in that case, to me, especially with the ADD the way it is, that would be like this, I would say, something like that, where they grind higher but not like explosion. ES did not break VWAP. Each chart on its own, but I see what you're saying here. So for ES, yeah, it could still be a trend potentially. But what this really tells you is that that buyers are not moving up with price the way you want them to. Their price up here is not being bought in the volumes you want to see as they immediately go back to it. So that's an interesting thing here. Your most traded zone is up here at 68.48. That is going to be heavy resistance if you look at the bigger charts. We are not in a threat of getting a trade. They're still out of sync right now. So we will go over to the 3-hour chart again real quick. So 68.50 right here is this breakdown level. If you just draw a line across, it's not exactly 68.50, but right in this zone, you can see they came into it here, and held a lot of those times. They got below it, got right back above it. They interacted with it here. So this area here is going to be a pivot of sorts, and we want to watch that area for rejection or acceptance. Right now, it looks like they're trying to accept it. They rejected it the first time through. Back into the most traded zone here. You have a buy cycle going on the NASDAQ. The ES is technically getting a buy signal right now, but the NASDAQ's already well past that. So if the NASDAQ never entered a sell cycle completely because it never pulled back this deep. So ES would, yes, be a trend day. SPY doesn't technically fall under that category if it does go higher here because it did break all of the moving averages and close below them. But now this is the caveat to that. If they do this, then yes, it's a trend. Then that's a 100% trend day. And guys, if you're wondering about things like, hey, why didn't we get a sell signal over here when the market went from 682 down to 679? That's a 3-point drop. Shouldn't we have gotten a sell signal? And the answer is yes. And also the answer is we did. The problem is it came in the pre-market right here. And the indicator's not just going to keep issuing sell signals every bar. It told you over here, sell the market, but we don't trade the pre-market. So we just have to let it go. But it told you right here, sell the market, it's weak, and the market was weak. So you're not going to get a reissue of a sell signal just because the market moved down more. It already told you you should be short. It just happened to do it outside of the parameters that we use for trading. Okay, coming back up to this breakdown bar and rejecting is very common. This is also the most traded area, so rejection here extremely common. How it rejects, is it going to reject, hold, and come back through, or is it going to fail down to these lows? I would lean, based on a few things, toward fail. They have found a little bit of structure on the ADD. They're up to negative 45 after dropping 1,000, but they're still negative. And the RTY has found a little bit of bullishness, but the transports and banks aren't fully on board yet. Banks have done a little better here. But also the failed breakout leans to the downside. So I would lean downside based on some of those factors. NQ trend day up parameter met. So that's an interesting thing because where are we at? We could get NQ into a sell here. Um, so NQ did make a trend day, sort of. And I say sort of because you have this breakout that failed and then they spiked it and now they're failing again. So if this fails below 24,827, this will break down and this will be a failed breakout and this will start to sell. They'll have big support down here, not big, but good support down here at 24,726 roughly. Otherwise, if they continue back up here, then I would expect them to trend, and ES would try to do that as well. But the nature of this breakout is very weak, and if they can't hold these, then it's kind of a lookout below situation. If they can, then it's a trend day. It's already a trend day by parameters. Excuse me, it is a trend day, but sometimes you can look at the trend and look at the other factors and say, is it going to fully trend? SPY, on the other hand, hasn't met the trend day parameters, nor has the ES. I don't think, right? ES hasn't yet. No, ES has not either. So that's another factor that would be something to watch. If ES and NQ or SPY, excuse me, don't get on board, then you can expect that NQ breakout to fail. But if ES and SPY do get on board, then look out above, most likely, or grind higher. I don't know if it's look out above, but it certainly could be a very strong squeeze. I mean, they're actually building a squeeze currently. They have been on the NASDAQ for many, many bars here. And a lot of times what you get for that energy is so where they built the squeeze, we'll go over to the NASDAQ real quick because we're nowhere close to a signal. So what you get on a squeeze is when the squeeze is being formed. Let's get to where we can see. So the squeeze started over here. Very often, squeezes build energy in a range. They can spike above the range and then squeeze down, right? That's certainly a possibility. And that's kind of how squeezes work. Most people will get stopped out when they spike above the range, and then they'll squeeze it to the downside and crush them. Or they'll fake breakout, pull back a little bit to the bottom of the range down here, wherever this is, like the 70 area or 850 area, and then stop out anybody who tried to get long and then squeeze them out. So we'll see. Right now, you have to give the NASDAQ a bullish benefit of the doubt, given that they have met trend day parameters and they are bullish here. And then you might say, hey, how come we never got a buy signal off of this low? Well, technically you did. So if I go to the settings of Pivot Point Pro and I switch this to ES, real quick, and hit OK, we did get a buy signal. And technically, they issued one over here, but it got taken away. So we did get a buy signal here. Now, the reason we don't have a buy signal is because the NASDAQ has been in a buy cycle for the whole time. They never went through a sell cycle. And when we're looking for a buy, we're looking for it to come out of a weakening sell cycle. So let me change that back so we have our parameters right real quick. So what that means is Um, we want the sell cycle to happen, and then we want to start to weaken, and then we want to see all the other parameters we need met to be met, and then they issue the buy signal when we're still technically in a selling cycle. So we are still technically in a selling cycle right now on the ES and SPY, but it's a weakening sell cycle, and the parameters have been met for the ES and SPY to say, hey, we should buy this, and you can see the buy would have worked out very, very nicely here. But the Nasdaq was already there, so the Nasdaq never got this where they got through their sell cycle. The Nasdaq did this and then kept in the sell cycle and kept going. So we never got the buy signal overall. And that's okay, guys. You don't want to take every trade because you don't want every trade to come through, because if the Nasdaq and ES aren't on the same page or they're too far apart in how they're doing things, very often it leads to chop and failure. Does it lead to sometimes you get green bars like this? Sure. You're going to have winning trades you miss. That should be how your trade that's one of the actual marks of a good trading system is you have a trade that didn't meet the parameters that would have worked out, but you didn't take it because it didn't meet the parameters. That's a good trading system. Things are always going to work for and against you based on probability, right? Probability says that if it's 60-40, 40% of the time it's going to do the other thing. So 60% of the time this buy would have failed. 40%, and I'm making up a number. And then 40% of the time it succeeds. Well, you want to be on the 60% side, so we don't take that trade, even though this was one of the times it worked out. You can't let your mind drift into, I should have taken that. Why didn't I take that? I should take every buy signal that the ES, whether the Nasdaq's on board or not. You should not. There's a reason for it. It's because we've studied it and found out that when we did them separately, it didn't work out. It was a much, much more of a losing indicator. So you want to be on board with the winning team. Okay, the squeeze is releasing its energy now, so it was obviously a bull squeeze. If they can follow through here, as long as this bar stays green and follows through, the squeeze is releasing, and we should see either trend day or continuation. Now, if they fail here, the squeeze will reignite itself, and it could release to the low side. But typically, you're going to see it release to the upside here. Now, what I would say is, because of Nasdaq, if the SPY and ES take out the high, we're going to have to call it a trend day. Um, However, for me, it's a somewhat skeptical trend day. The ADD is improving. It's back to positive 48. But the breakdown on the ES and NASDAQ down here is what has me skeptical. Very often when they break the moving averages, things don't go so well. If we get a trend day, we still haven't gotten it yet. So this down here worries me. I would be concerned. And these are why I don't trade trend days, because you're going to get a few things. You're going to get either grind, which is really hard to trade. You're just going to get see you later, gap and go, or you're going to get a reversal. And the reversals suck because if you get a sell signal up here and you take it, more often than not, way more often than not, the trend day is going to play out. So you take the sell signal, it fails. Take the sell signal here, it fails. Take the sell signal here, it fails. Then you take it up here and it might succeed, but you're 4 losing trades in to getting that. So even if this succeeds, it might get you back to break even. It might not. It might get you to a profit. It might not. It's just not a good trading environment. Also, you don't want to chase the trend. So even though you want to be on trend, you don't want to chase the trend. They're two different things. So being on trend means you're trading with what the market's doing, and that's a good place to be most of the time. When you're day trading, it's a little different. But being chasing the trend means that the trend has already established itself, and now you're at the point where they broke out so things can change. You may get the breakout, but they have found that the breakout chasing is a very difficult strategy these days. And you're likely going to have to go through a lot of grind and chop on the way up. You want to get in down here if you're going to get in, and then let the trend roll out. So Um, just a few tips there. Are there traders selling gold and silver to buy oil? Um, maybe. I know oil's been going crazy lately. Now, oil is highly manipulated. It is the one, if you're in my room, you know that when people talk about oil in the midday call and they want to see what oil is doing, I give a very strong caveat that I believe it is the one geopolitical market that is heavily manipulated to influence elections, especially in America, because gas prices and economy and affordability are the number one issues for almost every household. Um, People want to be able to pay their bills first and then worry about, you know, social economics later, social justice later. So oil prices are always a big deal around elections, and somehow they always seem to go down near elections. It's very strange how that always seems to work. So it's the one market that I stay away from because I do believe that there's a fair amount of manipulation in it. That's the only one. I can tell you right now. I will tell you 100%, and I'm writing a book right now that will be out hopefully soon. Um, I will tell you 100% that the stock market is rigged. 100%. But it's not rigged in the sense that they see your 10 unit order go in and they're like, I'm going to get Billy's 10 units right here because that $2,000 is going to make me rich. That's not what they're doing. If you think it's rigged in that way, you're wrong. It's rigged in the psychological sense. So they use a lot of factors to make you believe a certain way, and they do really they're phenomenally good at it. It is one of the hardest things to get people to understand and step away from. And the first part of that is the news, right? All right, we're getting into a place where, well, we have trend day now, so where we can get a sell signal. But um, last week we tried to counter trend the trend day, and it busted us in the face. So I don't think we're going to do it this week, but I am going to stay on for a little bit here, not too long here, maybe another 10, 15, and go through questions or anything. But the stock market is rigged, and you are trained from a very early stock market age, so in your 20s, whenever you start to get interested in the market. For me, it was my 20s. Um, you are trained by the algorithms, you are trained by the analysts on TV, and you are trained by the news cycles to believe certain things. And those certain things create emotion. It's all about emotion. So you are trained to believe that this is support, or even this is support down here, whichever one, doesn't matter. Some people like the bottom of the week, some people like the bottom of the candle. It doesn't really matter. They're both fair. But so you can just call it a zone. And you say, okay, here's my support zone. And you're trained to say when the market comes into the support zone and bounces, I should get in. And then you get in, and then they do this. And you say, shit, they broke support. I got to get short. So I got stopped out. So I'm going to swing short. And then as soon as you get short, they do this. They liquidity grab, they crush you, and they do it twice. They run an elaborate amount of psychological traps to create emotion in your brain so that you will make mistakes, and they condition every trader to trade the same way, which is why retail gets crushed every single time. Every single time, retail gets crushed because they all get tricked by the emotion of the short term trade. Now, in the long term, if you're talking buy and hold and you're talking things like that, completely irrelevant. We're not talking about brainwashing, and we're not talking about psychological triggers, and we're not talking about how to get you to believe a certain way. We're talking about structure and different things like that. But in day trading, once they figured out that they could manipulate day trading and rig day trading, they didn't rig it in the way that uh, they are secretly out to do. Well, they are secretly. It's not even that secret anymore. But anyway, they're not like watch us get, they're not out to get you. They're out to get all of you. And all they did was create a herd because humans are a herd animal. So they create like-minded thinking, and then when they can predictably predict what you're going to do based on thousands and thousands of samples of emotional data, when they can predictably do that, They can run the same script over and over every single day. How many people thought the market was going to crash here and go down to 6,500, 6,400, 6,300, and now they're going to get wiped out if the market squeezes? Well, that seems like an outcome that the guys on the other side would like, right? So they create this emotion in you, and then they flip that script um, and they swipe you out, and they do it over and over again till you're broke. So the quicker you can understand those things, the better you will be at seeing them, and the better you'll be at trading. I can't tell you how many times the market goes down 1.5%, and I get people DMing me or in my room asking questions, or just on YouTube or whatever saying, "Oh my God, the top is in, we're crashing, we're going down, it's over, blah blah blah," or vice versa. The market goes up and it'll never go down. That's what they want you to believe. That's where they want you at, and then they just blow it up. And then people say the market's rigged, and they're right, but in the wrong way. They don't understand how it's rigged. It's all a big mental trap, which is why the mind game in trading is the most important thing you can have. Serenus, welcome to the stream. The key levels indicator, it is liquid trader, I believe. Let me double check that, but I believe it's. Oh, do I go to? I forget. About this script. Yeah. Somewhere it tells me who wrote it. Yeah, liquid trader, and it is on TradingView. And if you just type in key levels and look for, it'll show you liquid trader. Um, so if you just go to indicators and type it in, look for the one by liquid trader, and that's it. And then you can go in and I format it to. I'll show you my settings. I have today's regular trading hours. I have the opening range on there, which is the light blue you can see here. So when they're in that, they're likely to stay in range. When they break above or below it, it just means a little more momentum. That's not an important one. It's just one I have on there. I always have my pre-market levels, my after-hours levels, so I know where the pre-market highs and lows are. Yesterday's high and low are important to me. Today's open is very important. So the open's always important because when they get back through it, and whatever, if they're up and they come back through it to the downside, that's big, and vice versa. If they're down and they come back through it to the upside, that's big. That squeeze played out, released to the upside, by the way. I like the average. That's not a big one, honestly, but I just have it on there. You don't need it. I can probably take it off, but it just tells you kind of where the average price is for volume. I do like yesterday's close and open because when you break those levels, that's important. This week's high and low is important. This month's high is low. I have the quarter on there just because it's not a huge one. You can look at them, but they're good support zones and resistance zones. So those are the ones I look at the most. It's just an easy way to not have to zoom out and say, where was yesterday's close at? Where was yesterday's this at? So the quarter open, coming back up to that, just if you were curious. We are on a trend day, though, guys. More secured by the NQ than ES and SPY, but nonetheless, we're going to treat it as a trend day because um, the trading parameters here are good for that. They're not great, but they're good. NASDAQs are great, and the NASDAQ is leading today, so we're going to go with what the NASDAQ is saying. Do you feel such a huge rally on NQ? The breadth is pretty low. I said I was a little skeptical about today's trend day, but obviously they aren't. They're attacking it pretty hard. We're up almost 1% or three quarters of a percent on the ES and SPY, and about 1.25 on the EQs. So while breadth is low, that's typical of weak bounces, but for a day that can sustain. Jacob, it is the fourth time we go under the weekly 21 SMA when looking at the 1 hour time frame. And this time was deeper. The daily 21 SMA is also just above both the ES and SPY. Any plan to swing trade if ES rejects 68.90 later today? Um, Potentially. I mean, the structures are not great for downside trades. It's okay on the NQ, but the ES and the SPY are a little rough, and swing trading has been. I mean, if you look at the daily chart, swing trading has been very difficult. You're going to have to really withstand the heat. If you got this one up here, somewhere over here, you got an okay swing trade down. Um, but up, down, up, down, up, down, up, down, like you're just not getting anywhere. So if you're trying to swing trade for any more than a day or two, it's really difficult right now. And, um, you know, the the market has been in a range since November, and it's trading off the bottom of the range now. It spiked the bottom of the range, got back into the range, and now is showing bullish tendencies, which usually tells you it wants to go back to the top of the range. It's a they need to stay below the 686.76 area. That's also the most heavily traded zone today, which makes sense, or most heavily traded zone here, which makes sense because that is the daily 21. So being below that is a bearish sign. But this, what's our volume look like just on a general level? I mean, this is a decent volume buy here. It's not great, but it's decent. Um, with follow through. So, you know, I I would need to see a little bit more of a rejection up here, and if we see that, then maybe. But there's just not a great setup for the downside or the upside. There's not a great setup right now. It's really ugly, and I've said that for a while, which is why we haven't traded too many longer term swings. Um, the short that we took here was super unlucky. Not unlucky. It was they did exactly what I just said. We had our stop at 69.50. They took it to 69.60 because 69.50 was a pretty good resistance zone. So they spiked it up here and then they obliterated it to the downside. And unfortunately, they stopped us out first because that's how they do it. And we were right, just not big enough with our stop. But our stop, I mean, it was a wide stop, so it was a tough spot. We took a third in profit and then had to close the 2/3 at the stop out. So um, we didn't get beat up too bad on it, but still it wasn't great. So swing trading is just hard right now. It's not we're not in any kind of real trend. We're in chop, and that becomes a difficult swing trade environment. I wouldn't if you said, "Hey, I shorted the daily 21," I wouldn't say, "Oh, what an idiot." Um, Especially if they rejected it first. Like if this was the daily 21 and you saw like this, you put your stop like here. I mean, that's not a terrible play. So I could look at something like that, but again, we're not the bear the biggest problem I have right now for short side is they literally opened the door for the bears and said, "Come on in, take anything you want," and the bears said, "We're good. We just want to come through the door one step and then we're going to get back on out of here." So the fact that the bears couldn't hammer them here is a little bit worrisome. I feel any trading is hard these days. It's been a tougher market the last 2 months for sure. A lot of trend days, a lot of volatility. The cool thing about the double-edged sword of volatility is as long as your trade can hold the stop, because very often when you get in, there's still going to be wild swings. So the 5-minute bars can swing up and down 2 points, which is a lot. As long as you can withstand the early part of the volatility and your stop doesn't get hit, it's amazing because you usually get 4, 5, 6 point runs on the SPY in these kind of environments. Like right now, if you were able to get in down here, well, I mean, the buy was right here, I guess, you're at 682, they're at 686 right now. So if we had been in sync here, if the Nasdaq wasn't such a B today, uh, we would have had a 4 point run up on this move, and the volatility is great for those kind of things, but it's terrible for the sense that one, it threw the ES and NQ out of sync, and then two, there's a lot of volatility in the entry. So if you can survive the volatility, the trading is great. You want volatility. You just got to understand that you're going to get stopped out sometimes and miss trades because of the wild swings at the beginning of your trade. It'd be nice if there was a live stream twice a week. Well, there's going to be one four times a week, but it's just going to be a closing video. So every day, if you're new, if you weren't here at the open, doing the closing videos, the overnight videos that I I did up until the new year, and then I have so many projects right now. There's that most of my afternoons are spent on those or doing kids things and other things. But um, so what I'm going to do is I'm going to live stream my call that I do with my group starting next week, so that it's just on YouTube as I do it, and I don't have to do all the production with it. So it'll be very, very nuts and bolts like this is. You just get in, the chart will be on there. I'll talk a little bit about my indicator and stuff, but mostly it'll be what the Nasdaq and ES are doing. It'll be a 10-minute video at most, and answer some questions and go through that. So there will be that in those videos. That'll be a much easier way for me to do my overnight video updates for everybody that likes those that isn't in my group. YouTube has been one, and Instagram both. Instagram, I need to get back on regularly as well. There's just been a lot going on. I'm in the middle of a lot of things. Here, give me 1 second, and I'll show you what I showed my group yesterday if you didn't see it. Um, give me 1 second. I got to pull it up and get it set up so that you can see it. So I've been working on a indicator, and I don't know if I have it on here right now. I may or may not be able to show it to you because of how I set up my charts and do things. There's a lot of projects and things going on. Let's see. Um, give me 1 second. I'm working on it. I have to go get. There's still a couple of hiccups on it, but the squeeze indicator that I've been working on is really, 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 really powerful. It's way. We went back 10 years of data yesterday on my call to go through it, and it was really good. Okay, 1 second. I have to go back to an old version. The current version has a couple of issues on it that we're working on. Promise, I'm almost there. Don't hate me. Something's not right here. Well, I'm trying to go back to an old version. It's not letting me. So we're running. We have a couple little coding things we're trying to get done, and um, let me try one more thing here and see if that works. But it's not letting me go back to my old version. The current code has a couple of little hiccups in it that won't allow it to print on the chart. So um, let me see if I can get it here. Oh, 1 second. Oh my goodness! I swear. All right, I have a version of it that'll work for now. Okay. So this isn't the best version of this, but so you had this one here. So this is just 2026. You had this squeeze here and a winner. This one was a loser, but then you go back. This squeeze winner, this squeeze winner, this squeeze winner. All the blues are take profits, by the way. The greens are your entries, the reds are your stops. If the take profit is on the chart, that means that you took profit. It's not where you take profit. It tells you as you're in the trade, here's where you take profit. Because it doesn't know. The squeeze could play on for a while, and then when it is ready for the squeeze to end, it says, hey, now you need to take profit. So this doesn't come up until you hit the winning trade. So the blue, it means it won. Red means, so like you entered on this bar here, the red stop was down here. Obviously, it never got to the stop, and this was your take profit. Um, so this one, winner. This one, winner. This one was technically a winner, so this is one of the coding issues we have. You can see the buy signal was here, the stop was here, it went up, and there was a take profit up here, but it's not printing. There's some code issue that we're working on, but this one was technically a winner. Um, this one was a winner. Your take profit is right there. This one, winner. This one, winner. This one, winner. So you're seeing, I mean, you're just very few losers, very, very few losers as we go back through. This one was a loser. This one winner, this one winner, and they don't look like big winners, but I mean, this one here you got in at 49.44 and you got out at 49.96. That's 50 points in a few days. That one's not a huge one, but there's other better ones, 100 points, 200 points. So it just kind of depends, but you're getting 50, 60, 80, 100 points in a couple days. By the way, winner, 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 winner. These two were losers. This one was a loser. This one over here, winner, winner from earlier. These are coding issues. There were squeezes that played here that aren't on the chart. So we're getting the coding worked out, but for some of there's a few glitches, but you are seeing that the wins far outweigh the losses. Far, far, far outweigh the losses. So we're not there yet. There's some coding stuff we got to work on, but we're getting there, and we've got it pretty dialed in. So let's see up here. What cracks and economical problems? The bulls are unreal. They're not. Listen, you remember, Prebz, I've been calling for another high for a while. And whether they get there or not, still to be determined. They haven't done anything crazy yet. Let's see. SPY, high volume level SPY, daily 21, weekly 21 is SMA. Um, 68.80, lots of resistance. Yeah, this should be an area you see some rejection. You're seeing a little bit now. Upper trend resistance trend line. It's harder to stay sit on hands than trade. I mean, you don't have to. I just tell you what I trade, and there are lots of people that are more aggressive trading than me, especially on swing trades. That's great. I applaud them. I'm not mad at anybody that trades differently than me. Sorry if this was asked already. Is there a code script needed to see the squeeze indicator changes? Are you talking about what's on my screen right here? It would be it's a whole separate code because so if you have IWJ Pivot Point Pro, I'm gonna go ahead and close this one out. If you have IWJ Pivot Point Pro and you go into your settings, you'll notice that there are this crossover and cross under alerts. So the idea was we were building the squeeze engine that we have right now, and the idea was to build in the squeeze alerts into the indicator. That's what the crossover and cross under are. That's what they're there for. However, because of how we have to code it, it doesn't work well inside the IWJ Pivot Point Pro code. It's got to be its own separate code. That's I'm gonna that's about as deep as I'm gonna get because I don't code it. But in other words, it just when it's coded together, it's not working right. When it's coded separately, it works very well. Um, so it would be its own separate code, but we're not fully done with it yet because obviously you're getting stuff that's not printing and we want to. I test all of my stuff very vigorously to make sure that we're not putting out crap. I try to put out good stuff. So it will be its own separate code, its own separate line item indicator. That was kind of the breakthrough we had, is that the coding issue here. We were having so much trouble with this because we felt like we had good squeeze data, um, and we were trying to get it to code in here with our stuff, and it wasn't working right. And then when we separated it out and made it its own thing, it works a lot better. So this is also the quarterly open, Maxime. So more resistance if you want to talk about that. Did you know you can invert any stock chart on TOS by putting a minus sign before the symbol? This really helped me when shorting. I'm gonna see what you mean by that. Minus. Huh. That certainly is interesting. I did not know that. See, I learned something today. That's weird. It still lists the high as the low. That's so weird. That's an interesting thing. I might look into that some. Thanks for the tip. I'm a math guy. I'm not a coding guy, and I realize coding has a lot of math in it. That's not, but I do a lot of math stuff, so I figure out the math side of things and then say, hey, make these math numbers work, and then another guy goes, okay, and then he writes a whole bunch of lines of things. But as far as like getting into trading views or thinkorswim's exponential amount of things you can do on them, I like to keep it as simple as possible. So I don't know a lot of the little tricks and things of of those programs. But I do like that update, George. And also, welcome to the stream, Abin Nev. I can't say that. I don't know what that is. Abina. I'm gonna go with Abina, and that might not even be it either. I tried. All right, we have a trend day. We had no trades today, zero trades whatsoever, which stinks. But it is what it is. You go in tomorrow. At least it wasn't. February, like I said, 14 out of the 19 days were trend days, and we still ended up positive about 5,000 for the month. So, um, and we were down about 6,000 going into the last week. So again, guys, go back and watch the beginning of the video on trading if you didn't, and how to trade properly so that you can understand that losing is part of trading, not trading is part of trading, sitting on hands is part of trading, cash positions are part of trading, risk reward is a huge part of trading, and mindset is all of trading, all of it. I will take a poor trader with a great mindset over a great trader with a bad mindset every day. All right, guys. Well, we tried. Not much today to do. So hopefully you enjoyed some of the learning and talking and stories and everything else. If you didn't, sorry. I did my best. Um, we'll be back next Wednesday to do it again and see if we get a little bit more, I don't know, trading, I guess. Signal Goose, thank you. Welcome to the stream. And also, thanks for coming. All right, everybody. Have a wonderful day. If you're in my room, we'll be back for the closing call, or I'm sorry, the midday call at noon, and then see where the market's at and go from there.